how things would ultimately roll out and which state would gain or which state would not lose, would lose, we will come to know after only the GST rollout. But the care has been taken to compensate the states for a period of 5 years. Now again, this issue was debated upon in the GST Council, that how this compensation would take place over a period of 5 years. The first thing that has been decided is that the base year would be the revenues which are audited by CAG for the period 2015-16, and after that a nominal growth rate would be given of 14%. Now you see, one thing that is being debated is, now the many of the states are already assured that irrespective of what effort they make to collect the taxes, they are going to be compensated. So one thing is that, I mean, if this is there, so no state may make any effort, but obviously after 5 years they will have to fend for themselves. So the efforts will have to be made by the states to see to it that the revenue collections are there. So again, so this is the whole, and anyway, I mean, once I come to the question answers, so we can discuss this more, because and again, on deciding the 14% figure, so a lot of various formulations were discussed. So one could be at a national level, we could take the real growth rate and add inflation to that, and that could be the compensation rate. And if we look at the present growth rate, which is around say 7 to 8% and inflation of 4% or whatever, so it comes to only 12%. So the 14% that has been decided, it's a very good figure if you look from the state's perspective, and center has been very, very generous in giving this 14%. But there are some states, I mean, which have done better than 14%, particularly Bihar in the last 2-3 years. So finally every state agreed, because it really takes out the risk from the states, and everyone is going to get a uniform nominal growth rate of 14%. So again, in the GST, it's a tax on supply of goods, and almost everything is covered other than consumption of alcohol for human alcohol for human consumption. So other than that, all items are concerned, except the 5 items for which we will not require a constitutional amendment in case they have to be brought into the GST regime. But for the transition period, for the initial period, the petroleum crude, high-speed diesel, motor spirit, natural gas, aviation turbine fuel, so they have been kept outside the purview of the GST. Again, the reason was that both alcohol for human consumption and as well as these petroleum products, they are a high revenue generator both for center and the states. So they had to be initially been kept out of the GST regime, but the council is empowered at any time to bring them into the GST regime, and for which we will not require other constitutional amendment. So the goods are, I mean, includes all material, commodities and articles, but the service definition is very, very broad. Services mean anything other than the goods. So that's also like Article 366(26)(a), there's a new definition that has been introduced. Now, once the transition takes place, the Government of India's power, these are all consequential amendments like it was mentioned, the Government of India's power to levy service tax shall go away. Similarly, the powers to levy GST will go away except for the items which are not been brought into the GST regime. Goods and service tax levied and collected by the government shall be distributed. Now again, the GST, one is the portion which will go to the states, but the GST portion which will come as a CGS to the central government, this will also go to the divisible pool and would go to the states on the basis of the Finance Commission recommendations. So to take care that we, I mean, don't put more surcharges like it is done in many other taxes, so there's a specific provision that has been created that no further surcharges can be levied on goods and service tax. Now another very important thing is that any modification in the GST council structure, so that would again require a special procedure, which again means that it has to be passed by the 2/3 majority in both the houses, and again by 50% ratified by the more than half of the legislatures. So provisions of the 279 creates the GST council. It has been discussed. So I have few slides on that which we could rush through. And there are other consequential amendments which have been made in the union list and the state list, because once the GST is eliminated, you cannot levy tax or levy sale tax or service tax or excise duty. So the time frame of 1 year has been kept for subsuming the taxes into the GST. So that is what our finance minister has been saying in all the public fora. That is very important. It's only a question of time that when the GST is rolled out. Because from the 16th September, the states would lose their power to put any taxes. Similarly, the center would also lose its power to impose excise duty. And of course, when we are saying the losing of powers, it's a 8 lakh crore we are talking of. And the whole government should come to standstill in case we do not rule out GST. Of course, like in case this has to be done and we are, for any reason we are not able to do it, it would require another constitutional amendment. But as of now, we are very hopeful to roll out the GST by 1st July 2017. And there are also like powers given to the president to remove difficulties, which is a standard clause in most of the amendments which are carried out. So this GST council, again, the structure has already been explained by Dr. Das Gupta. So it consists of Union Finance Minister as the chairman and the Union State Minister MOS for the revenue, and chairperson is Union Finance Minister, and the vice chairman is to be chosen among the ministers of the state government. So quorum is 50% of the total members, and the decision is to be taken by the majority of the 75% of the weighted votes of the members present and voting. So it's a concept here, this was explained, but 75% of the weighted votes. So in case if there are quorum is complete and the number of members present are less, then the weightage would also get divided or assigned accordingly. So it's not the weightage based on the 31 state ministers that present in the council. So it's not based on the actual, but the people who are present in that meeting. So the weightage will have to be worked out according to at the time when the voting takes place. And the council will be guided by the need for a harmonized structure of the GST and have a harmonized national market for goods and services. And council is to make recommendations on taxes which are to be subsumed in the GST, exemptions and the thresholds. So next slides I'll come to that, what decisions have been taken and what are the limits that have been set, the GST rates, model GST law and procedures. Now this is very important. Now we are at present working on the model GST law, which is like the state GST law is almost the mirror image of the central GST law, because both the taxes will be levied concurrently and at the same time. And in fact the interface of the taxpayer will also be the same, and the whole process will be run electronically, and the electronic backbone is being provided by the GSTN. So when the taxpayer goes to this GST network, so and through his registration, he will only have to file one return which will consist of all the three taxes, CGST, SGST and IGST. So the interface is only one. It's not that he has to file 3 different returns for the 3 different taxes. So that's an important point, that I mean, even though it looks like there are different taxes, but it's only one tax because they will be levied at the same time, and the taxpayer also will have to file the return at the same time. So there are also provision of the special category states, and again the council will decide, I mentioned earlier, the date from which the GST would be levied on petroleum and related products. Now just this is a little bit highlight on this. So I joined after the first meeting had taken place. So you can just imagine that the frequency with which we are having the meetings. So we approximately 2 meetings every month, and we have already had 10 meetings since it was constituted on 12th September 2016. So the first major decision that has been taken is the threshold limit for the exemption has been fixed for 20 lakhs. So there was little confusion. So it is the same threshold limit both for the goods and services. There is no difference between the two, except that only the difference that has been made is for the special category states, where the threshold limit is rupees 10 lakhs. Now again this issue was debated, like at present the threshold for the excise duty is 1.5 crores. But whereas the most of the states for the VAT the threshold is around 10 lakhs. So it's not that the taxpayer, I mean new taxpayers are going to be brought into the tax net or they will have to pay the taxes. Because anyway most of the taxpayer traders were already paying the taxes or having the interface with the government, because the threshold for the VAT was around 10 lakhs only for the most of the states. So now we have increased that threshold from 10 lakhs to to 20 lakhs. And for the special category states, northeastern states, Sikkim, it's 10 lakhs. Now, there is another concept of the compounding threshold. Now, once you are opt for this scheme, so the tax rates are very nominal tax rates are decided, which at present has been decided differently for the traders and the manufacturers, and you just have to pay that uniform tax rate, and you don't have to comply with most of the requirements which are there under the Act. Now, this very important thing that has been done is at present many states give exemption, tax holiday to attract industry into their areas. So it could be in the form of, say, exemption from the central excise duty, which is a central duty, or similarly exemption from the VAT sales tax for 5-year, 10-year period. Now this causes a distortion. Now if the input tax credit is to flow along the chain, and what we are talking the seamless flow of the credit, so these have to be stopped. So the GST Council has taken a decision that there will be no area-based exemption schemes, and in case any state want to give, say, any tax concession, so that will have to be upfront through the budgetary route, through the reimbursement route. And because in many of the states, or particularly northeastern states and the hilly states, so they have already committed that they would give exemption for a period of 10 years, and say maybe 3 or 4 years are still left. So special laws or special decisions would have to be taken by those states that for the next 4 years these states would be compensated by way of reimbursement. So this formula for calculating compensation, we already discussed about it, has already been decided. The 14% nominal growth has been fixed for the next 5 years. So the tax rate structure, so there is a category of the exempt goods, then there is a tax of 5%, 12%, 18% and 28%. The special rate for gold and ornaments, which is yet to be decided, and that will be decided at a later stage after we have more clarity. We put the goods into different baskets and then calculate that how much revenue is coming, and then we will take a call on what is the rate to be fixed on the board. Now, other than that, a cess has been put on certain luxury and sin goods, which will be over and above 28%. And this cess which is being put, this will be used exclusively for the purpose of compensating the states in case they come through the loss. Now you see, there was a lot of debate. Many of the states wanted that center should actually compensate the states from their own budget rather than putting this cess, and this cess and all should also go to the divisible pool and either CGST and the SGST. But a decision has been taken, and a special act is also there, compensation to the States Act, and now a fitment committee has been constituted which would fit the different commodities into different categories. Now this question has been asked that why we are having so many rates. You see, ideally we could have one rate, which is an ideal situation, but if we look at a global experience also, most of the countries have 2 and 3 rates. But if we look at India, there were 2 considerations which went into having this 4-rate structure. First was that it's a new experiment, and the government of India is committed to compensate the states for the loss of revenue. So we have to see that at least we have something which we get enough revenue so that the central government doesn't have to compensate the states too much. And the second is that you have to have such a design of the structure that, suppose like we were to put a uniform rate of 18%. So at present many of the essential commodity which constitute main our consumer price index basket, so their rate would have got increased from 5% or the 0% to the 18%. Obviously it would have caused a huge inflation. So that is why, and India is a very diverse country and the living standards are different at different levels. So we have to take care of that and see to it that we have a tax structure so that we have a minimal impact on the inflation, and the people who are below poverty line or in the lower middle class, so they are also protected. This is another very important decision which has been taken of the financial, arrangement of the, finalization of the administrative arrangement, which was a very, very contentious issue, that how the taxpayer base is to be divided among the center and the state. So the most important thing in the mind of the government was that we should have ease of doing business in mind, and the taxpayer should only have the single interface. So what is being done is that the CGST officials are being empowered for the SGST Act. Similarly, SGST Act officers are being empowered for the CGST Act. So they would be administering both the acts, and the taxpayer will only have the single interface. So this is like initially, even when the GST was being designed, so it was being thought that from the 5-6 authorities they will have the 2 authorities. But we have further brought it down to only 1 authority, and there will be a single interface which will be there for the taxpayer. And of course, now the decision that has been taken is that above 1.5 crore, from where we get around 90% of the revenue. So there the division would be 50%, 50% between the state and the center. And below 1.5%, 90% of the taxpayer base would go to the state government, and the 10% taxpayer base would go to the central government. So we have already finalized the draft compensation law, which has been approved in the last meeting, which has this how the compensation will be designed, and further how will they compensate it, and given a nominal growth rate of 14%. The draft GST related laws, they have already been considered in the GST Council once. So the final vetting is taking place in the Law Ministry, and the next meeting of the Council is proposed for the 4th and 5th March 2017, and we hope that the GST related laws would be passed by then. And once they are passed, so the CGST laws would then be taken to the Parliament and passed over there, and the similar laws would have to be passed by the 31 state governments, 29 states and 2 union territories with legislature. So it's a big exercise, but again the question which again will be debated in the next sessions is that whether all the states would act to it, because it's only a recommendation which is going from the council. But in case the GST has to succeed, and it has repeatedly been also been told by the finance minister, the states would have no option but to agree with the recommendation of the council, otherwise the GST would be a non-starter. And in case even one state would say were to opt out, so they would be big loser, because the input tax credit would not flow to that state, and the people, industry, trade and business in that state would be a loser, because they will not be able to avail of the input tax credit. So it is expected that the way the whole structure has been designed, that all states would also be passing the law simultaneously, and the GST would become a reality. The last thing that, why we should all work, it has already been discussed, but from the taxpayer point of view, from the government viewpoint, from different stakeholders viewpoint, it's very important to understand that what are the main benefits of the GST. Firstly, like these are the number of taxes which are going to be subsumed.